Hello friends, a very warm welcome to all of you. Wish you and your family a very happy Holi. So the markets this week have been showing some strength from the lower levels, and Nifty is quite close to one of its critical levels of 17,800. So we have been maintaining a little cautious stance on Nifty in the last few weeks if you observe. But if it crosses 17,800 zone decisively and it continues to maintain above that this week, then our cautiousness may get reduced and we may turn neutral to positive in the short term also. Of course, the global uncertainties are not sorted out, but the charts are showing signs of reversal. But unless the strength is clear on the chart and this zone of 17,800 is broken decisively, will not change our view from cautious, will not preempt anything. So this is about the markets. So this company which we are talking about today, Hiranba Industries, this was requested a lot of times by many people in the comment section. I see that this IPO came with very good subscription and listed quite well, and from there the stock has been continuously falling. So a lot of people who took in the IPO and several people who bought it later also looking at the valuations because they appeared cheap have got stuck in this stock. So we'll talk about the stock in detail along with the developments what are happening in the company so that you can take a decision whether to stay in the stock or come out, and the new people who want to invest in the company also can decide whether it is worth investing at these levels or not. So if you're new to the channel, please do subscribe and hit the bell icon. And if you are not a part of our Telegram channel, you can join today, because the way we have discussed the market views now, we discuss daily in our Telegram channel every morning, every day, so that you get to know what you can expect from the market that day. So let's talk about Hiranba Industries. So in this video, we will cover the topic in different sections. The first section will talk about the business model of the company in brief. Then we'll talk about how the company has been performing in the recent quarter and what is the reason for the fall in the share price of the company, what is the outlook which the company is giving in the near term, and what are the valuations, how is the chart, and finally we'll make our view as to what should be done if you are a shareholder in the company. So let's begin. So the company is into manufacturing of technicals as well as formulations. So technicals are kind of a product which is a previous in the value chain, and formulations is the final product which is used by the end consumer. So technicals is something like intermediates and or APIs, and formulations are the final usable product. So the company manufactures both the things. In fact, they also manufacture intermediates. So they have a complete integration of the products which they manufacture. And in terms of categories, the company is into insecticides, herbicides and fungicides. So these are the different products which the company manufactures. Will not get into much technical details. And in formulations, again, in multiple categories, there are several products which they manufacture. This list keeps on growing more and more as they keep spending on R&D and they keep launching new products every quarter. So this business which the company is into, which is insecticides, herbicides, this is directly related to the agriculture. And as you know, the agriculture is a seasonal business. So that's why these kind of companies are not given very high valuations, because their sale depends on how the monsoons are that particular year and how the demand is in the agricultural sector. So unlike specialty chemicals, these agrochemical companies are given comparatively lower valuations. To have a glance overall in the business operations of the company, they have 4 manufacturing units and they export to 65 countries across the globe. They have more than 700 people working with them, and they have nearly 10,000 dealer network using which their products are sold across the globe. Out of the total revenue, roughly about 30% comes from exports, and out of that 20% specifically from China. And in terms of return ratios, the company is doing comfortably about 20-25%. Now that you have understood the business model of the company in brief, let's talk about how the company has performed in the recent quarter, which is Q3 FY23. The revenue has drastically gone down, as you can see from the green bar on the screen, from about 395 crores in the earlier quarter, in the same quarter in the last year, versus 280 crores in this quarter this year. So there's a steep decline in the revenue. A similar trend you can see in the EBITDA as well as profit after tax, which have drastically gone down to just about 26 crores and 14 crores respectively. In terms of margins also, there is a steep decline from about 19% last year to 9% in EBITDA and 13.5% to just about 5% in profit after tax. So when this kind of a poor performance comes, then there is a massive fall in the share price, which was visible on the charts recently, because people not just fear about that particular quarter's performance, they also fear going further whether the earlier performance will be sustainable or not. Now, when we listen to the management speaking in their interviews as well as we read their earnings call transcript, we get to know different reasons for the poor performance of the company this quarter and probably in the last few quarters as well. The management says that due to the geopolitical tensions across the globe in their major economies, which are US, Europe, and China, the business of the company is drastically impacted. But I differ a little with the management on this point, because if I see similar companies which are working in the same industry, their performance is not that bad as this company. And this company has nearly 20% of their sales coming from China. And due to the lockdowns in China, because the China was still functioning with a zero COVID policy, their business was drastically impacted. But now that policy is gone and the management is hopeful that going further, the Chinese sales will bounce. Because of the inflation, the company wasn't able to pass on their increase in the cost because the demand itself was low. So in such a scenario, you can't increase your price and sell your goods. So they decided to maintain the same prices, and the sales went down, and that is why the margins also got impacted. On the other hand, there were some costs which got increased, like freight cost, power and fuel cost, raw material cost, due to which the margins were again impacted. That is why there is a lot of pressure on the margins of the company in the last few quarters. Another reason was that their end customers already had inventories piled up earlier. So as and when that inventories get cleared, then the demand will come back to their normals. Another thing what the market is closely watching is the company's management has been lowering their growth guidance. Earlier they were indicating about 20% plus guidance this year FY23. Then they reduce it to maybe 15-20%, and now they are talking about a flat year, which is the same as FY22. So when such kind of things happen, when the management reduces their growth guidance, then the public becomes very cautious. People are not sure whether the company will be able to grow in the future or not. So when this kind of questions come in their minds, then people start selling the stock and the stock price goes down. A couple of things which are peculiar to this kind of a business is seasonality, as we have discussed, because this is directly linked to agriculture. And another thing is, a lot of these products are closely monitored by the regulatory authorities, by the government. And wherever they see that these are harmful to the environment, those products keep getting banned. So when such products get banned, the revenue is immediately impacted of this company. So due to these reasons, generally these kind of stocks in these industries are given lower valuations when compared to the other chemical companies. Now, in spite of all these problems, still what is the outlook of the management going further? The capex plans are intact, although the capex spend is slightly reduced in FY23. They had earlier given a guidance of 150 crores, but the actual spend was lower than that. But still, the capex spend is going to continue. They have some new facilities coming, and they are in the process of launching some new products also. So in the near term, the management feels that the scenario is little challenging, but going further in the long term, the management expects they will be able to maintain a growth rate of about 18-20% in the long term comfortably, and also an operating margin of 18-20%. So they will continue to launch new products and diversify their product portfolio. They will continue to grow their distribution network in India as well as abroad. They will continue their R&D spend. So they are positive about their outlook in the long term, but in the very short term, they expect their Q4 to be slightly better than Q3 and this year to be flat. And next year, they are expecting a growth of about 18-20% compared to FY23. Now, after the share price has fallen, what are the valuations of this company? The company trades at somewhere around 9x, and the market cap to sales is slightly less than 1x with a PB ratio of 1.64. So visually at these levels, the valuations look very attractive, but the valuations totally depend on how the company performs in the next 2 to 3 quarters. If this kind of slowdown is seen in the next 2-3 quarters as well, then these valuations will completely change and these will become expensive. So it is too early to comment based on these valuations, because this include the trailing 12 months performance, where the performance has 1 or 2 good quarters and 1 or 2 bad quarters. So instead of coming to any conclusion on these valuations, whether they are expensive or cheap, we should wait and watch for the next couple of quarters and see whether the performance comes back or not. So this is a chart post listing. It was trading somewhere around 900, and from there it has a steep fall to about 320 kind of levels. So people who have bought at the top are stuck very badly in the stock, and now they are unable to understand what to do. What I understand that the major mistake for people, what they have done in this stock is they have bought at a higher valuation. They did not realize that these kind of companies generally trade at lower valuations when compared to the others, and their entry point went wrong. these kind of valuations which the company is trading at right now, these are the normal valuations of this company, which is somewhere around 1 to 2 times the market cap to sales. So if you have bought it at a very high price, you went wrong with the entry. One more point you should keep in mind is whenever a company comes for a IPO, there is a plan of about 3 to 4 years before, from which they keep planning an IPO. So the company sees to it that for those 2-3 years, the performance is generally kept better than normal. So we have to closely see whether post IPO that kind of a performance continues or not, and then you should take a call whether to invest in that company or not. So what should people do who are already stuck in the stock? I don't suggest you to invest more and average the stock at these levels, because we are not very sure whether the performance will further improve or not. The management is saying that this is a temporary challenging issue that they are facing and the business will bounce back. And as investors, we also can be positive and wait for a quarter and see whether the business improves in Q4 when compared to Q3 or not. But still in Q4 also, if the downturn of the business continues and they are unable to come up with better results, then we cannot rely on the management much and keep holding the stock and see lower levels. A better option for the investors would be to switch to some other stock in the chemical industry itself, where you are assured of the returns and you are assured that the company's performance will come and the stock price will also follow an uptrend. Now, people who are looking at the valuations are feeling that the stock is cheap, the 900 stock is available at 300 and they want to enter the stock. I suggest them to wait for a few quarters and see whether the performance improves or not, and then only you have some reliability that what the management commentary is being given, that is true, and the performance is also in line with the management's commentary. Then you can consider entering this stock. One more point you have to remember if you are already invested or you're planning to invest in this sector is a little bit cyclical. So entry and exit is also important in this sector. If you just keep holding the stock for a very long time, the returns will be comparatively lesser than timing this sector a little and making an entry and exit and playing the cycle quite wisely. So to summarize, people who are holding the stock, they can wait for a quarter and see whether what the management says is actually happening and the Q4 performance is improving compared to Q3 or not. And for people who want a fresh entry, for the moment, as per me, the stock is in a avoid zone. So this is about Hiranbai Industries. I hope you understand now the business of the company, why the stock price is falling, and what should you do as an investor in the company. If you want me to make such videos on some other companies which you are stuck in, you can leave the names of those stocks in the comments below. I will choose one of them for my upcoming videos. And if you are still not a part of our Telegram channel, do join today. Subscribe to our YouTube channel as well. Thank you for watching and have a wonderful day.